Morning.
Morning, Gav. How are you?
Yeah, another day in paradise.
Absolutely, mate. Another interesting week in the market. Seen some pretty big moves. Index hasn't done a huge amount, but gee, we've seen some big moves in a couple of key stocks.
Yeah, under the bonnet of BHP and some of the resources stocks have gone absolutely crazy.
Yeah, BHP almost touching 50 yesterday. I don't think it's been probably a decade since I've seen it up at $50. So
Yeah, I think.
great recovery for it. Looks probably a little bit hot to me. We might get onto that one later in the discussion,
Yeah,
but some big moves. Rio, obviously, a big recovery after the announcement of the takeover plan for Gemcorp. So that'll be interesting.
yeah, yeah. There's plenty happening, isn't there? There's no shortage of
Yeah.
the market that are keeping us on our toes.
Yeah, certainly. Now, I thought we'd just sort of chat a bit about what other things are going on in the market. So we're leading into reporting season, probably starts really around that, the 10th of Feb, but a lot of people start to position themselves now, especially now that all the institutional traders and everything are back from the Christmas break. And we've noticed that this week, we've definitely seen volumes increase.
Yeah, and you've got US reporting kicked off as well with all their major banks reporting the last couple of days, which were all pretty solid, really. So, it gives
Yeah.
us a bit of a lead into what we might see and certainly how their market's reacting to the results. So, yeah, it'll I think Commonwealth Bank's probably the big one to watch for us. What's your views there, H?
Yeah, Combank definitely. Looking around, I think bad and doubtful debts will be very well controlled. The property market's maintained pretty solid levels across the country, so it's unlikely to be a lot of you know, sort of issues coming out of that for the banks. Lending seems pretty strong. The cost of capital is probably still well maintained by the banks, so it'll just be how their general costs are looking. But I do think CBA looks a bit cheap for where it has been trading. And it's a bit strange to say that when it is trading on massive multiples, but it does look cheap for the range it's traded in over the last 12 or 18 months.
Yeah, and it also gives it's probably the biggest company, I guess, that gives you a really good feel for how the broader economy is actually traveling as well. So I think
Yeah.
a lot of people are watching it to see what its books are like, what it might mean for housing, what it might flow on effects for retail, for all sorts of things that come out of that report. So it'll be the one to watch.
Yeah, definitely. Just coming back to that comment on retail, I mean, it's interesting. Woolworths has had a really good run over the last probably month and a half. So that probably shows to me there is a bit of confidence in consumers' ability to spend. And Coles has also had a good run as well.
Yeah, some strength in the Australian economy, which will be interesting to see if that flows on to inflation and interest rates as the year goes on. So plenty of things to watch.
Yeah, definitely. Well, mate, let's get into a couple of ideas you had for this week. You got the slides ready to go?
Yeah, right. I'll just set this up. Won't take a sec. And we're away.
Righto.
Yeah, so I've got BHP up there. I had some clients traded last month as well. As you can see, its chart there, it's jumped outside the technical indicators that I look at.
Yep.
We sold calls last month. We're actually in a position to roll out and up again this month. And some other clients sold yesterday the 5101 calls for February for 83 cents, which is a
That's
pretty
great premium, isn't it?
fantastic
Yeah.
premium. I think the thing to watch here is that the main commodities that it mines have jumped so hard in the last couple of months. They're already at their 26, 27 targets. So people are
Yep.
factoring in thinking that's going to flow through to their earnings and the stock prices have jumped with it. But that's some pretty big assumptions there. And it's certainly looking a little bit overbought to me. So I think selling calls here, particularly if you bought it, in the last 6 months to 12 months, if you've sold it at 51, I think you'd be pretty happy.
I think majority of clients, if they lost the stock at $51, would be sitting on a pretty tidy profit.
Yeah.
Um, just a bit of a case study. I had a client of mine that we sold BHP puts back in Feb 24 at $46. We took the stock up, and then we've written covered calls over the last sort of 12, 18 months over the position. And we end up losing the stock yesterday at $46. So the same price the client bought the stock at. But then when I went through and looked at the premium plus the dividends that have been received over that basically 2 years now, they'd received about $6.50 in premium and dividends. So while they got in and out of the stock at the same level, the options and obviously the dividend really made the trade a pretty attractive one for the client.
Yeah, it shows the value in using options to complement your portfolio and make it work a bit harder. An example like that's a great one.
Yeah, definitely, definitely. Right. Well, let's jump on to the next one. What do we have on the list? Origin.
Origin.
Yeah,
Yeah,
look, it's had a bit of a fall, hasn't it? It's sort of come back with energy stocks just a little bit out of favour. We like Origin. I know there's targets around the market still up around the 11.80 sort of to $12 range.
yeah,
So we thought it was a bit of an opportunity to sell some puts with the bit of weakness. Um, it's just sitting under $11 at the moment, 10.98. I would definitely think it's one to look at selling. So that 10.75 put would be a great trade.
yeah. I think it's just in the last one, it's just hit some technical indicators I look at as being over sold. So its targets are relatively high, as you pointed out. Few more hold recommendations on this one, but I think if you didn't have an energy stock in your portfolio, it wouldn't look out of place. As with the next one we're about to talk to, and I think with this one, the premium's pretty good for a $10 stock,
Yeah, definitely,
$10.80
definitely.
stock. Yeah,
Yeah. So
sorry. Yeah.
excellent. Right. And what else do we have on the list? We had
Yeah, AGL, another energy stock. Its technical indicators aren't as strong here, but its target recommendations are very, very strong.
yep.
And it pays a good dividend. You can sell the puts or even take up the stock here. The average price gain, there's price target's about 31% higher than where it is now. I think if you didn't own this stock, paying 5.5% dividend, it certainly wouldn't look out of place in a diversified portfolio. Either of these two stocks really wouldn't look out of place in a diversified portfolio.
Yeah, look, definitely AGL's a bit of a house favourite stock for us. So when it gets cheap, definitely riding puts, I think, is a good play. And yeah, I do see many of those targets sort of up around the $10 mark. So there's definitely some good upside in the stock based off what analysts are saying.
Yeah, and the options premiums for a stock around this sort of price, the options premium is pretty good, really.
They're good, aren't they? Yeah, definitely,
It's
definitely.
surprising with
So
the lower volatility in our market that you're getting premium like this.
yes, definitely.
The last
Right. And
one,
what
worth
would
a little bit of chat. Did you want to touch on this one?
Yeah, so it's interesting. So Amcor's been a stock that we've both been pretty bullish on, and look, I own a bit of Amcor myself. I've liked the stock for a while. They came out and announced, well, they've done a consolidation of shares. So basically, for every 5 shares you had, you've got one Amcor share now. What it actually did was obviously adjusted the share price from sort of that 12.50 right now, and I'm just going to have a quick check where the price is, Gav. It's had a really big jump, hasn't it?
Yeah, it sure does. So
Where is it now?
should up over the
It's
60
trading at
mark.
what are we, 66.30 it's trading
Yeah,
at
wow.
now.
Yeah.
It's up again. So since the announcement, or since the consolidation was done, I think the stock's up about $2 or $3 a share. Now, and obviously, you're going to have less shares than you had before, but it's been a really attractive move. So it's one of those things. Consolidations, we don't see a lot of them in our market, but when we do, they do tend to have a positive effect to the underlying share price. And this one is definitely one that's showing that, and hopefully we might see Amcor continue to push. I think targets, as you've got there, Macquarie at 87.10. I've seen a few targets updated around that mid 70s level. So I think a stock we still want to own, and hopefully more upside to come.
I think as I said, we've been plugging this stock for quite a while now. I think if you bought some a little bit earlier on and were interested in topping up a bit, you could certainly average in now. And with those targets, and I was even looking at some options premium yesterday. The options premium on these are pretty good. I don't think I'll be
Yep,
selling calls yet. I think I'll be waiting for a little while yet. But the consolidation has certainly given it a little kick.
it definitely has. But I think before we go on to any other slides, I had a couple other stocks I just thought we might just have a quick chat about that we haven't
Yep.
got slides up for. But look,
Yep.
James Hardy's been a real interesting one. It's a stock
Wow.
that we've traded a bit in the past. It had a really probably ordinary 6 months after reports last year, a little bit of rate concern in the US, obviously US housing market, and concerns regarding many of the Trump policies. But with a real lift in US housing and some of the refined policies that Trump's now looking at, or refreshed policies, whatever he's got in mind. Um, we've seen a real jump in James Hardy over the last sort of 5 or 6 days. And then we also saw them come today with an announcement that they're confirming their guidance for 2026. They did announce the closure of a couple of smaller plants, but they're still very positive on their guidance. And look, the stock's having a really good run. So hopefully there's more upside to come for it.
Yeah, we looked at this about 6 months or so ago. I think I had some clients buy it, and it didn't do too well after that. I think there was talk of interest rates and all sorts of things changing, and it dropped pretty hard. And in the last month, it's had a really good run. Well, I had a couple of clients do repair trades on it, where you buy a
Yep.
call and sell two calls above it, which for a couple of them worked really well, and we were able to sell calls again, roll it up, and sell calls again this month. So we're sort
Yeah.
of chasing, riding that as it keeps going. So it's had a really good run, and hopefully it'll keep going.
Yeah, definitely. Look, another strong move today. So, yeah,
Mm.
been a real leader this week in the market. And as we said,
Mm.
while the index maybe hasn't done huge amounts, the within it there's been a lot of big activity.
Certainly some big moves under the hood.
So, right, mate. Well, that's probably enough for today.
Yep.
For anyone who does follow our videos, I'm going to be interviewing at some stage next week two of the directors of Fairway Cap, the wholesale fund that we run,
Yeah.
just to talk about the performance over the last 6 months, which has been really really good, and talk about what the guys are looking for over the next 6 months.
Yeah,
So
fantastic.
we'll get that up on the channel maybe later this week.
Yeah, that's great, H. And we'll do the same thing again next week as well. So we'll talk to you
Sounds
then.
good.
Right.
Thanks,
See you
mate. Have a good
then.
one.
Bye.